in the case of the gold-silver ratio, that the market can stay irrational longer than we can all stay solvent. And that's really very true. Today is a good example. I mean, the market has been unbelievably volatile today. And the only other thing I'd like to say, when we talk about gold at all-time highs yesterday at above 3150, and here we are today with all this volatility at 3110 or so, yet there's eerie quiet in the market. There's no headlines. There's no retail euphoria. Quite to the contrary. This is not a bubble at all.
In today's news recap, silver hits over 8-week low as market frets about industrial demand. Prices of silver dropped to over 8-week lows on Friday as concerns about demand for the industrial precious metal dominated sentiment due to recession fears stemming from U.S. President Donald Trump's slew of tariffs. Silver typically tends to move alongside gold, but industrial uses such as electronics and photovoltaics account for more than half of global demand, estimated at around 700.2 million troy ounces as of 2024, according to the Silver Institute Industry Association. While gold, traditionally seen as a refuge from political and economic uncertainty, has touched multiple record highs this year, silver has struggled to break through the 12-year peak at $34.87 an ounce. It hit on October 22nd, 2024 at $31 an ounce. Silver has dropped nearly 9% since Trump's latest tariffs announcements on Wednesday. I would expect silver to lag gold until there is more economic clarity and a resolution in trade and tariff risks, given silver's exposure to industrial activity and PMIs, said Akash Doshi, global head of gold strategy at State Street Global Advisors. Trump's tariffs, robust central bank buying, increased flows into gold-backed exchange, traded funds, and worries about inflationary pressures have fueled safe haven gold surge in 2025. Spot prices hit a record high of $3,167.57 on Thursday. But the gold-silver ratio, a measure of the amounts of silver needed to buy 1 ounce of gold, is currently at 100, its highest level since June 2020. The upside provided by heightened safe haven demand will be capped by silver's negative industrial angle, said Ricardo Evangelista, senior analyst at brokerage firm Active Trades. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
The gold was down $80 at one point, and about an hour ago it was actually up for the day, and now it's down about $27. So when you talk about this whipsawing, yet only giving back less than 1% on gold, isn't the case right now with silver, which is down $2 to right at $32 or just above. Certainly and I guess if I had to summarize it, to me, it's almost like there's a clear effort to flush the managed money out of their long silver positions on COMEX. And maybe it's to allow these commercial banks to cover at lower prices. I don't know, but certainly today was one heck of a volatile day, not just for precious metals. I mean, look at the markets themselves. The Russell 2000 index officially has entered bear market territory for the first time since 2022, and NASDAQ down almost 6%. And, the markets are getting clubbed. And then you have Secretary Bessent saying, that, the collapse of the market is not a MAGA problem. It's the MAG 7 problem. And we talked about last week on your show that the MAG 7, when you talk about the hedge funds having their lowest allocation to the MAG 7 in over 2 years, things are certainly starting to get very interesting, as they say, which of course is the Chinese curse. When you live in interesting times, these are not for the faint of heart, for sure. Well, let's not forget about the dollar, which has lost 35% of its purchasing power against gold in less than a year. And so it's not just the volatility we see in silver, but the volatility in the dollar too. And that's the thing people need to remember, is that we're valuing everything against dollars, but gold's rise of 35% just since the beginning of the year would signal that the dollar has lost 35% of its value against gold in the last year. And now you have the Fed pricing in a 70% chance of rate cuts in June, and the yield on the 10-year falling. Again, you're looking at the potential of dollar weakness going even further and further and further. So, I mean, you make a very valid point, but I would also add to that this fiat system, as you mentioned, is beginning to show cracks. And it's this global confidence that's underpinning the dollar's dominance seems to be wavering a bit, especially with what Trump is doing with the tariffs and what the markets are saying. And when you see the Russell 2000, which is the broadest measure basically of the economy, all the small caps, the businesses getting hammered, I think it's time to buckle up a little bit. I'm not making a statement on where I think gold and silver are going, but I'm just simply saying that the markets are telling you right here and right now that they're concerned about what's going to happen the rest of the year.
In today's news recap, silver tumbles on trade war, demand concerns. Silver fell to $31 per ounce on Friday, the lowest level since January 29th, bringing weekly losses to over 9% as the escalating trade war fueled concerns over global demand and recession risks. China's finance ministry announced on Friday that it would impose a 34% tariff on all U.S. goods starting April 10th, retaliating against the duties imposed by the Trump administration earlier this week. Trump had announced on Wednesday a 10% baseline tariff on all imports, with higher rates targeting major economies, including China 54%, the EU 20%, Japan 24%, and India 27%. Trump even taxed Milei with a 10% tariff on Argentina. Equities and commodities took the hardest hit in the sell-off, while investors flocked to safe haven assets like government bonds. Despite the broader market slump, silver and other precious metals may receive renewed support as recession fears intensify, with traders increasingly pricing in potential Federal Reserve rate cuts in the months ahead. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
That I read today on Bloomberg that, more or less said, well, now that Trump said gold would not be tariffed, as we have said a million times, is that they're not going to tariff gold and silver. That was a ruse. That you saw the price fall off, and now you're going to see the exchange for physical. All of this stuff is gonna revert, and metal's gonna flow back to London. I don't believe that to be the case. Look, we've seen over 15 million ounces stand for delivery on COMEX this year, and it seems to be driven by some form of a whale. I mean, who the heck's got that kind of money? Who's got that kind of firepower? Question is it a foreign government? Who the hell is seeking physical delivery? And again, it's the rising distrust in the U.S. financial stability. I don't think this is going to end. At the same time, there was just an article coming up that says Germany, again, is now very, very concerned about keeping gold in U.S. vaults. They're concerned over the Western custodianship. And so, no, I don't think that we will see the metal flow back to Europe. And I don't know that we're really going to figure out what this is all about until we figure it out. There haven't been any clues really given other than we're supposed to believe it's all about tariffs, which I don't believe. That's what Bloomberg wants us to believe. I don't believe that it is. I think it's more along the lines of removing counterparty risk, and whether it be Germany removing the counterparty risk or the U.S. removing counterparty risk, reshoring, holding it in your hands. I think that's really what it's coming down to. It's about having it in your hands. It's the old saying: if you don't own it, if you don't hold it, you don't own it. Maybe that's really what it's all about. And no more paper trusts. I want it in my possession. This has been stealth accumulation. And the funny thing is, to your audience and to you and I, well, what do you mean stealth? Central banks are gobbling it up, right? And all the big money is standing for delivery. But take a step back from YouTube and try and find that. Watch Fox and, spending a few days in Rome last week, I was stuck with the only American speaking channel was CNBC. I wanted to pull the hair out of my head, but I watched it for a while. And I mean, you wouldn't know that gold even had a heartbeat as it's continuing to rise and rise and rise and rise. And so it's very interesting when, people are wondering, is 3,100 the top? Some analysts calling it top. Well, you got banks right now talking about 4,500, and including some very large banks like Bank of America and Goldman Sachs. So, how are we near the end, or is it just beginning based upon the lack of retail involvement, the lack of no headlines on the media? This isn't a bubble at all. So yeah, I think this is a natural pullback. It's gone straight up. It needed to exhale a little bit. Certainly did, but yet you can see a market that was down $80 this morning has roared back 50. In fact, it was up positive at one point about an hour ago. So it's volatile still, but here we are, and not even down 1% in gold after an $80 decline earlier in the morning. Crazy times, to say the least.
What do you think about Andy Schectman's take? Are you using this dip in silver as a buying opportunity, or do you think there's more downside ahead? Drop your thoughts and price predictions for gold and silver in the comments below. And if you want more insights just like this, check out the video right here. You're going to love it. I'll see you on the other side.